Welcome to the Smart Investor Podcast with Portfolio Manager Beyond Dale, the show that takes the guesswork out of investing by bringing you actionable price analysis of the stock, ETF, Forex, and commodity markets. Here is your host, Beyond Dale.
Dow soars to new highs. Has the market adopted a new alternative paradigm? Hello, everyone, and welcome to another edition of the Smart Investor Podcast, where smart investors get their up-to-date price analysis and market information. Are we in a new paradigm? That is the question. I saw this headline there's this billion-dollar investor, and he says that we wonder if the market has adopted an alternative paradigm. And just to give you a brief quote in the article, he's saying that given the performance of certain stocks, we wonder if the market has adopted an alternative paradigm for calculating equity value. Now, this type of thought and this type of thinking is what we saw in 1999 up to 2000. We saw this thinking in 2008 also. We have in the headlines today, we have the president tweeting about and essentially bragging about the stock market highs. Stock market just hit another record high, he says. Jobs looking very good. Again, headlines about alternative paradigms bring thoughts of the 2000 stock bubble, when folks were saying that valuations don't matter, companies making money don't matter, and we saw the market just going up and up and up on those headlines essentially. And the current market environment reminds me of that situation. Currently, the Dow is up 200 points. It just hit 200 points, or 0.86%. S&P 6.99 points. The Nasdaq up 24 points. Crude oil is up 1.12%. Gold is down $3 at 0.23%. And the name of this podcast is the Smart Investor Podcast, and I can say, folks, do not get sucked into thinking that this rally will go up forever. Every time we're at new highs in the markets, we see stock and we see headlines like this. I wonder if sometimes these, especially these hedge fund billionaires, if they put out information like this just to suck in more people into the rally so they can sell later and sell to the folks piling onto this rally at this point in time. Am I saying the market is topping out at this time? That's not what I'm saying. The strategy for dealing with a market like this is to ensure that you have your stop loss levels under the market. Don't try and short the market. Don't necessarily exit the market at this point in time, but have your stop levels trailing the market. And this is the essence of what I call a market-led approach. In bull market conditions, especially in markets that are starting to go parabolic, and that's what I describe the Dow now. The market is really going parabolic, and we're just seeing gains and gains and gains. You can make a lot of money in an environment like that, but ensure you have your exit plan. And in tomorrow's edition of the podcast, what I'm going to do is go through a number of different stocks and give you a recommendation of what I think is an exit point. For example, just looking at the Dow in general. Looking at the Dow, we see a good point to say have an exit is around the 22,400 level. 22,400 to 22,500. If we see the market dropping below that level, I would say for the Dow, at least if you're along the Dow, to exit that market. So just to reiterate, you can make a lot of money in a market environment like this, but ensure you have your stop loss levels below the market. And that is the difference between you, a smart investor, and someone who is just letting the market hit them up and down. Because last week, Monday on the 19th, was the anniversary of the 1987 stock market crash, where we saw stocks decline by 22% in one day and 44% in under 2 weeks. So we do not want a situation like that to hit us in the face, because just imagine if your portfolio was to decline 44% starting from now the 2 weeks 2 weeks in the future. What would that do for you? Would that do for your retirement? Obviously that wouldn't be very good. And we saw a situation where the market declined by over 50% in the 2000 stock market bubble, and we saw a 62% from the highs in 2008. The high of 2008 in S&P in the Dow was just above 14,267, and low was just below 6,000. Actually, low was 6,460. So we saw over a 55% decline in the value of stocks in a few short months in the 2008 financial crisis. So just do not allow yourself to get sucked into thinking that this market will just keep going up and up and up. The strategy is to have your exit plan in place, and that is the essence of what I call a market-led approach. If you want more information on that market-led approach, you can go to smartinvestorcentral.com and download that free report on the market-led approach. It will save you and protect the profits you should have, at least, in this market, and also prepare yourself for when the inevitable correction occurs. How would you position your portfolio? How would you position your investment? Because this is the Smart Investor Podcast, and anyone listening to this podcast should be aspiring to be smarter than the average investor, because the average investor in an environment like this wouldn't know what hit them when this market declines. Okay, so that is, I hope you all listen to what I just said, because I've heard numerous stories from investors when the market declined in 2008, when the market declined in 2000. The stories are the same over and over. They thought everything was fine, the market declined, and some folks lost 60%, 80% of the value of their portfolio. So that is my thoughts on reading a headline of some billionaire saying that we have adopted a new market paradigm, because we haven't. The fact is, we're in a scenario where we're seeing high demand for stocks, and the market is starting to go parabolic, and at some point the market will correct itself. Looking at support and resistance levels with the Dow, we have some minor support at 23,000, and the resistance is currently at the psychological level of 23,500. Taking a look quickly at the currency markets, we see where the US dollar index is up on the day. The US dollar index is actually up on the day, and trading at that 93.84 level. It's coming up to resistance at this 93.90 up to 94. We're having some strong resistance in the dollar at that point in time. So it'll be interesting to see if the market can close above that 93.94 level in the US dollar index. Looking at the broader commodity markets, we see commodities are mixed on the day. We have stuff like cotton is down on the day. while the copper market, I've been speaking about the copper market for the last couple of weeks because copper is in a very strong uptrend. And I believe there are opportunities out there to profit from copper. Copper is currently up 0.5% on the day so far. Okay, so that is it for today's edition of the Smart Investor Podcast. Remember, if you want more information on the market-led approach, go to smartinvestorcentral.com. And tomorrow I'll be looking at some individual stock positions and looking for some exit points. And these exit points will shift as the markets move higher, and that is natural when it comes to having a market that continues to move up. We shift our exit points up and up and up until the market comes down and hits those exit points. So tomorrow I'll be highlighting that on some popular stocks. We are going to go through maybe about 20 stocks and their exit points. So thank you very much for listening, and I hope you have a wonderful day.